Question 1. The monitoring system demonstrates an unusual pattern of claim processing within Powszechny Zakład Ubezpieczen, indicating a potential deviation from standard operating procedures. Which of the following approaches best addresses this situation from a risk assessment perspective? Option A. Immediately halt all claim processing activities until the anomaly is fully understood, potentially causing significant operational disruption. Option B. Conduct a comprehensive risk assessment to identify the root cause, evaluate potential impacts on Powszechny Zakład Ubezpieczen's financial health and regulatory compliance, and develop targeted mitigation strategies. Option C. Focus solely on the immediate financial implications of the observed pattern, disregarding potential broader operational or compliance risks. Option D. Classify the anomaly as a minor data fluctuation and monitor for recurrence without immediate further investigation. The correct answer is B. Conduct a comprehensive risk assessment to identify the root cause, evaluate potential impacts on Powszechny Zakład Ubezpieczen's financial health and regulatory compliance, and develop targeted mitigation strategies. Explanation. The monitoring system demonstrates a potential breach of internal controls and regulatory compliance within Powszechny Zakład Ubezpieczen. The challenge lies in accurately identifying the root cause of the discrepancy and implementing appropriate corrective actions without compromising operational efficiency or customer trust. A robust risk assessment approach is crucial to systematically evaluate the identified issue, determine its potential impact, and formulate a response that aligns with Powszechny Zakład Ubezpieczen's obligations under Polish insurance law and internal policies. The correct approach involves a thorough risk assessment that systematically analyzes the observed anomaly. This entails identifying the specific process or system where the deviation occurred, evaluating the likelihood and potential impact of such deviations on financial stability, customer data security, and regulatory reporting, and then prioritizing mitigation strategies. This aligns with the principles of prudent risk management expected of financial institutions, as mandated by Polish insurance regulations, which require entities to establish and maintain effective risk management systems. The goal is to prevent future occurrences and ensure the integrity of Powszechny Zakład Ubezpieczen's operations. An incorrect approach would be to dismiss the anomaly as a minor, isolated incident without further investigation. This fails to acknowledge the potential for systemic weaknesses or fraudulent activity, thereby violating the duty of care and the requirement for proactive risk identification and mitigation under Polish insurance law. Another incorrect approach is to immediately implement drastic, unverified corrective measures that could disrupt ongoing operations or negatively impact customers, without first understanding the full scope and cause of the problem. This demonstrates a lack of due diligence and a failure to apply a structured, risk-based decision-making process. Finally, focusing solely on the immediate financial impact without considering the reputational damage or regulatory penalties that could arise from a poorly handled situation, also an inadequate risk assessment. Professionals should approach such situations by first recognizing the signal from the monitoring system as a potential risk event. The next step is to engage in a structured risk assessment process, which includes defining the problem, identifying potential causes, assessing the likelihood and impact, and developing a response plan. This systematic approach ensures that decisions are informed, proportionate, and compliant with regulatory expectations and ethical standards. Question 2. The monitoring system demonstrates a pattern of minor delays in claims processing and occasional discrepancies in policyholder data entry within Powszechny Zakład Ubezpieczen. Which of the following approaches best reflects a proactive and compliant risk assessment strategy for PZU? Option A. Document the observed deviations and conduct a targeted risk assessment to determine the potential impact and likelihood of these issues escalating, prioritizing remediation efforts based on the findings. Option B. Focus solely on implementing immediate short-term fixes for each individual instance of delay or discrepancy without analyzing the underlying causes or potential systemic risks. Option C. Immediately initiate a comprehensive review of all claims processing procedures and data entry protocols, regardless of the perceived severity of the observed deviations. Option D. Assume the observed deviations are isolated incidents and will self-correct over time, requiring no further action from PZU's risk management team. The correct answer is C. Immediately initiate a comprehensive review of all claims processing procedures and data entry protocols, regardless of the perceived severity of the observed deviations. Explanation: this scenario presents a professional challenge because it requires the assessment of potential risks to Powszechny Zakład Ubezpieczen, PZU, arising from identified operational deviations. The challenge lies in accurately categorizing these deviations and determining the appropriate response, balancing the need for proactive risk mitigation with the efficient allocation of resources. A deep understanding of PZU's internal risk management framework and relevant Polish insurance regulations is crucial for making sound judgments. The correct approach involves a systematic evaluation of the identified deviations to determine their potential impact on PZU's financial stability, operational efficiency, and compliance with regulatory requirements. This includes assessing the likelihood of adverse events occurring and the severity of their consequences. By prioritizing risks based on this assessment, PZU can allocate resources effectively to address the most critical issues first, ensuring compliance with Polish insurance law and protecting policyholder interests. This aligns with the principles of prudent risk management expected of insurance undertakings under Polish regulation, which mandate robust internal control systems and risk assessment processes. An incorrect approach would be to dismiss the deviations without proper investigation, assuming they are minor or inconsequential. This failure to assess potential risks could lead to regulatory breaches, financial losses, and damage to PZU's reputation, violating the duty of care owed to policyholders and the supervisory requirements of the Polish Financial Supervision Authority, KNF. Another incorrect approach would be to overreact to every minor deviation with extensive and costly remediation measures, regardless of the actual risk level. This inefficient use of resources could detract from addressing more significant threats and may not be justifiable under the principle of proportionality, often considered in regulatory oversight. Finally, an approach that focuses solely on immediate operational fixes without considering the underlying systemic causes of the deviations would fail to prevent recurrence and would not constitute effective risk management. Professionals should employ a structured decision-making process that begins with a thorough understanding of the identified deviations. This involves gathering all relevant information, assessing the potential impact and likelihood of each deviation, and then prioritizing them based on a defined risk matrix or framework. The next step is to develop and implement appropriate mitigation strategies, followed by ongoing monitoring and review to ensure their effectiveness. This iterative process ensures that PZU maintains a strong risk culture and remains compliant with its regulatory obligations. Question 3. The monitoring system demonstrates a pattern of increased claim processing times and a slight uptick in customer complaints related to policy adjustments for Powszechny Zakład Ubezpieczen. Which of the following approaches best aligns with the company's regulatory obligations and risk management framework? Option A. Forward all individual customer complaints and claim processing time data directly to the Board of Directors for immediate decision-making without prior internal analysis. Option B. Initiate a comprehensive review of the claim processing workflow and customer feedback mechanisms, cross-referencing findings with relevant Polish insurance regulations and internal risk appetite statements to identify root causes and potential impacts on solvency and customer trust. Option C. Immediately implement a temporary freeze on all policy adjustments to prevent further complaints, while deferring a detailed investigation into claim processing times until the current workload subsides. Option D. Focus solely on reducing the cost of claim processing by streamlining documentation requirements, assuming that efficiency gains will naturally resolve customer dissatisfaction. The correct answer is B. Initiate a comprehensive review of the claim processing workflow and customer feedback mechanisms, cross-referencing findings with relevant Polish insurance regulations and internal risk appetite statements to identify root causes and potential impacts on solvency and customer trust. Explanation: this scenario presents a professional challenge because it requires the Powszechny Zakład Ubezpieczen employee to interpret complex monitoring data and apply it to a critical risk assessment process. The challenge lies in discerning genuine risk indicators from noise, understanding the potential impact on the company's financial stability and regulatory compliance, and then selecting the most appropriate response based on established procedures. Careful judgment is required to avoid both underreacting to potential threats and overreacting with unnecessary or costly interventions. The correct approach involves a systematic and evidence-based evaluation of the identified anomalies. This entails cross-referencing the monitoring system's alerts with internal policies, relevant Polish insurance regulations, such as those issued by the Polish Financial Supervision Authority (KNF), and industry best practices for risk management. The goal is to determine the likelihood and potential impact of the observed deviations on Powszechny Zakład Ubezpieczen's solvency, operational integrity, and customer protection. This approach is correct because it aligns with the principles of prudent risk management mandated by regulatory bodies, ensuring that Powszechny Zakład Ubezpieczeń maintains adequate capital reserves, operates within legal frameworks, and safeguards policyholder interests. It demonstrates a proactive and responsible stance towards potential threats. An incorrect approach that focuses solely on immediate cost reduction without a thorough risk assessment would be professionally unacceptable. This failure stems from a disregard for the potential long-term financial and reputational damage that could arise from unaddressed risks. It violates the regulatory expectation that insurance companies prioritize solvency and policyholder protection over short-term savings. Another incorrect approach, which involves escalating every minor alert to senior management without initial analysis, is also professionally flawed. While vigilance is important, this approach leads to information overload, dilutes the focus on significant risks, and wastes valuable management time. It fails to demonstrate efficient risk management processes and could be seen as an abdication of responsibility at the operational level, potentially contravening internal efficiency guidelines and KNF expectations for structured risk reporting. The professional reasoning process for similar situations should involve a tiered approach. First, understand the alert and its immediate context. Second, gather supporting data and assess its significance against established risk thresholds and regulatory requirements. Third, determine the appropriate course of action, which may range from further investigation to immediate mitigation or escalation. And finally, document the entire process and the rationale for the chosen action. This structured approach ensures that decisions are informed, justifiable, and aligned with both internal policies and external regulatory obligations. Question 4. The control framework reveals that Powszechny Zakład Ubezpieczeń (PZU) is considering a new approach to assessing the risk profile of potential life insurance applicants. Which of the following approaches best aligns with the regulatory requirements for fair and objective risk assessment in the Polish insurance market? Option A. Relying on anecdotal evidence from sales representatives regarding perceived risk levels of certain applicant demographics. Option B. Utilizing actuarial data and individual health information directly relevant to mortality risk, ensuring all data processing complies with RODO. Option C. Assigning higher risk premiums to all applicants residing in specific urban postal codes based on general crime statistics for those areas. Option D. Implementing a blanket policy to deny coverage to individuals who have previously filed multiple insurance claims, regardless of the nature or validity of those claims. The correct answer is B. Utilizing actuarial data and individual health information directly relevant to mortality risk, ensuring all data processing complies with RODO. Explanation. This scenario presents a professional challenge because Powszechny Zakład Ubezpieczeń (PZU) operates within a highly regulated insurance sector in Poland. The challenge lies in balancing the need for efficient risk assessment with the stringent legal and ethical obligations to protect policyholder data and ensure fair treatment. Misinterpreting or misapplying risk assessment methodologies can lead to discriminatory practices, regulatory breaches, and reputational damage. Careful judgment is required to ensure that risk assessment is both effective for PZU's business objectives and compliant with Polish insurance law and data protection regulations. The correct approach involves a comprehensive and data-driven risk assessment that adheres strictly to the principles of proportionality and necessity, as mandated by Polish insurance regulations and the General Data Protection Regulation, RODO, which is directly applicable in Poland. This approach prioritizes objective, verifiable data points that are directly relevant to the insurance risk being assessed. It avoids reliance on broad demographic categories or assumptions that could lead to unfair discrimination. Specifically, it would involve analyzing actuarial data, historical claims experience, and individual risk factors that are demonstrably linked to the likelihood and severity of a claim. This aligns with the ethical duty to treat customers fairly and the legal requirement to process personal data lawfully and transparently. An incorrect approach that relies on broad demographic assumptions, such as assuming higher risk for individuals from certain geographical regions without specific, localized data to support this, fails to meet the standard of individualized risk assessment. This can lead to unfair pricing or denial of coverage, potentially violating principles of non-discrimination and fair competition as outlined in Polish consumer protection laws and insurance directives. Another incorrect approach that uses subjective or anecdotal information rather than objective data for risk assessment is professionally unacceptable. This introduces bias and lacks the rigor required for sound underwriting decisions. It undermines the credibility of PZU's risk management processes and could expose the company to legal challenges based on arbitrary decision-making. A third incorrect approach that fails to adequately document the rationale behind risk assessment decisions, or that does not allow for review and appeal, also represents a significant ethical and regulatory failure. Transparency and accountability are key tenets of regulated industries. Without proper documentation, PZU cannot demonstrate compliance with its obligations, nor can it ensure that its risk assessment practices are fair and consistent. The professional decision-making process for similar situations should involve a multifaceted evaluation. Firstly, identify the specific regulatory requirements applicable to the situation, including Polish insurance law e.g. Stała o Dieselownoskach Ubezpieczeniowej I Riskurasajnej and data protection laws RODO. Secondly, assess the available data for its objectivity, relevance, and potential for bias. Thirdly, consider the ethical implications of the chosen approach, particularly regarding fairness and non-discrimination. Finally, ensure that the chosen methodology is well documented, auditable, and allows for a clear and justifiable rationale for all risk-based decisions. Question 5. The assessment process reveals that Powszechny Zakład Ubezpieczen, PZU, is in the final stages of developing a novel insurance product. Before proceeding to market, what is the most prudent and regulatory compliant approach to managing potential risks associated with this new offering? Option A. Conduct a comprehensive, cross-functional risk assessment involving all relevant departments to identify, analyze, and evaluate potential market, operational, compliance, and reputational risks, and develop mitigation strategies. Option B. Proceed with the product launch immediately, assuming that the product development team has already accounted for all foreseeable risks. Option C. Perform a limited risk assessment focusing solely on potential market demand and competitive pricing, without in-depth analysis of operational or compliance implications. Option D. Assign the entire risk assessment responsibility to the marketing department, as they are best positioned to understand customer reception and potential market challenges. Correct answer is A. Conduct a comprehensive cross-functional risk assessment involving all relevant departments to identify, analyze, and evaluate potential market, operational, compliance, and reputational risks, and develop mitigation strategies. Explanation. The assessment process reveals a scenario where Powszechny Zakład Ubezpieczen, PZU, is considering a new product launch. The situation is professionally challenging because it requires a proactive and thorough risk assessment to ensure compliance with Polish insurance regulations and to protect both the company and its potential customers. The challenge lies in identifying and evaluating potential risks before they materialize, which demands a deep understanding of the regulatory landscape and ethical considerations specific to the Polish insurance market. The correct approach involves a comprehensive risk assessment that systematically identifies, analyzes, and evaluates potential risks associated with the new product. This includes considering market risks, operational risks, compliance risks, and reputational risks. By engaging relevant internal departments and potentially external experts, PZU can gain a holistic view of potential pitfalls. This approach aligns with the principles of prudent risk management mandated by Polish insurance law, which requires undertakings to have robust systems and controls in place to manage risks effectively. Specifically, the Polish Act on Insurance Activity and Reinsurance, Ustawa o Zielonoskiej Ubezpieczeniowej I Reskiurasaźnej, emphasizes the need for sound governance and risk management frameworks. Ethically, this proactive stance demonstrates PZU's commitment to consumer protection by ensuring the product is viable, compliant, and does not expose policyholders to undue risks. An incorrect approach would be to proceed with the product launch without a formal risk assessment, relying solely on the optimism of the product development team. This failure to conduct a risk assessment is a direct contravention of regulatory expectations for prudential management and could lead to significant financial losses, regulatory sanctions, and reputational damage for PZU. It also represents an ethical lapse, as it prioritizes speed to market over the safety and soundness of the product for consumers. Another incorrect approach would be to conduct a superficial risk assessment that only considers obvious market risks, neglecting crucial compliance and operational aspects. This selective assessment would leave PZU vulnerable to unforeseen regulatory breaches or operational failures, potentially leading to product withdrawal, fines, and customer dissatisfaction. Such an approach fails to meet the comprehensive risk management requirements stipulated by Polish law. A third incorrect approach would be to delegate the entire risk assessment to a single department without cross-functional input. This siloed approach risks overlooking critical interdependencies between different risk categories and operational areas. For instance, a marketing department might not fully grasp the compliance implications of certain product features, or an IT department might not foresee the operational risks of a new distribution channel. This lack of integrated perspective is a common pitfall that undermines the effectiveness of risk management and is contrary to the spirit of robust internal controls expected under Polish regulatory frameworks. Professionals should adopt a structured, multidisciplinary approach to risk assessment. This involves establishing clear risk assessment methodologies, ensuring broad stakeholder engagement, documenting findings thoroughly, and developing actionable mitigation plans. The process should be iterative, with regular reviews and updates as new information becomes available or as the product lifecycle progresses. This systematic and integrated approach ensures that PZU can launch new products responsibly, safeguarding its financial stability and its reputation as a trusted insurer in Poland. Question 6. Cost-benefit analysis shows that a new, innovative insurance product developed by Powszechny Zakład Ubezpieczen, PZU, has the potential for significant market share growth and increased profitability. However, the product's structure is complex, and its terms and conditions are detailed, raising concerns about potential customer misunderstanding and increased claims processing challenges. Which approach best aligns with PZU's regulatory obligations and professional responsibilities? Option A. Proceed with the product launch after a brief review by the legal department to ensure basic compliance with Polish insurance law, prioritizing the immediate financial gains. Option B. Launch the product with a disclaimer that PZU is not responsible for customer misunderstanding of the terms and conditions, focusing marketing efforts on the product's benefits. Option C. Conduct a comprehensive risk assessment involving all relevant departments to identify, evaluate, and mitigate potential operational, legal, and customer-related risks before product launch, even if it delays the launch and potentially reduces initial profitability. Option D. Outsource the risk assessment to an external firm that specializes in cost-benefit analysis, trusting their findings without internal validation. This failure to conduct a thorough risk assessment violates the spirit and letter of Polish insurance law, which emphasizes consumer protection and financial stability. Specifically, it could lead to PZU offering products that are not suitable for the intended audience, resulting in mis-selling, increased customer complaints, and potential regulatory intervention. Another incorrect approach would be to rely on a superficial review of the product's compliance with minimum legal requirements, neglecting the broader ethical considerations and the potential for unintended negative consequences. This overlooks the proactive risk management expected of a reputable insurer, and could expose PZU to significant reputational damage and loss of trust among its stakeholders. Professionals should adopt a structured decision-making process that begins with a clear understanding of the regulatory landscape and PZU's risk appetite. This involves engaging cross-functional teams, actuarial, legal, compliance, marketing, operations in the risk assessment process. The process should prioritize identifying potential harms to consumers and the company, followed by developing robust mitigation strategies. Decisions should be informed by a holistic view of risk, not just financial upside, and should always err on the side of caution when consumer interests or regulatory compliance are at stake. Question 7. The monitoring system demonstrates a pattern of minor deviations in customer interaction logs and data entry procedures within Powszechny Zakład Ubezpieczen. These deviations, while not immediately appearing to cause financial loss, suggest a potential departure from established internal protocols. What is the most appropriate initial course of action for the compliance department? Option A. Proceed with disciplinary actions against the employees whose logs show the highest number of deviations, as a deterrent to future noncompliance. Option B. Initiate a comprehensive, multi-departmental review to identify the root causes of these deviations, assess their potential regulatory and operational impact, and determine the necessity for corrective actions in line with PZU's internal policies and Polish legal requirements. Option C. Immediately implement mandatory retraining for all customer-facing staff on data entry and interaction protocols, assuming the deviations stem from a lack of awareness. Option D. Classify the deviations as insignificant operational noise and close the monitoring alert without further action, given the absence of immediate financial loss. The correct answer is B. Initiate a comprehensive, multi-departmental review to identify the root causes of these deviations, assess their potential regulatory and operational impact, and determine the necessity for corrective actions in line with PZU's internal policies and Polish legal requirements. Explanation. This scenario presents a professional challenge because Powszechny Zakład Ubezpieczen, PZU, operates within a highly regulated financial services sector in Poland. The monitoring system's findings indicate potential noncompliance with internal policies and possibly external regulations concerning data handling and customer interaction. The core challenge lies in interpreting the severity of the identified deviations and determining the appropriate response without causing undue alarm or overlooking critical risks. A nuanced approach is required to balance operational efficiency with regulatory adherence and customer trust. The correct approach involves a thorough, evidence-based investigation that prioritizes understanding the root cause of the deviations. This entails gathering all relevant data, interviewing involved personnel, and cross-referencing findings with PZU's internal procedures and applicable Polish insurance and data protection laws, e.g., the Polish Act on Insurance Activity, the Personal Data Protection Act implementing GDPR. The goal is to ascertain whether the deviations constitute breaches of policy or law, and to what extent. This methodical approach ensures that any remedial actions are targeted, effective, and compliant, thereby safeguarding PZU from regulatory penalties and reputational damage. An incorrect approach would be to immediately implement broad, punitive measures without a full understanding of the situation. For instance, assuming all deviations are intentional misconduct and initiating disciplinary actions without investigation would be a failure to uphold principles of fairness and due process, and could violate labor laws. Another incorrect approach would be to dismiss the findings as minor anomalies without assessing their potential systemic impact or regulatory implications. This oversight could lead to a failure to address underlying control weaknesses, leaving PZU exposed to future, potentially more serious, breaches and regulatory scrutiny. A third incorrect approach would be to focus solely on superficial fixes, such as retraining staff, without addressing any systemic or technological issues that might be contributing to the deviations, thus failing to achieve lasting compliance. Professionals should employ a structured decision-making process that begins with objective data gathering and analysis. This should be followed by a risk assessment to determine the potential impact of the deviations on PZU's operations, customers, and regulatory standing. Based on this assessment, a proportionate response should be formulated, which may include further investigation, policy review, staff training, or system adjustments. Throughout this process, adherence to PZU's code of conduct and relevant Polish legal frameworks is paramount. Question 8. System analysis indicates that Powszechny Zakład Ubezpieczen, PZU, is reviewing its internal risk assessment framework. Which of the following approaches best aligns with the regulatory requirements for identifying and assessing material risks within the Polish insurance sector? Option A. an approach that prioritizes the identification of risks based on the ease of their measurement, even if less measurable risks might pose a greater threat. Option B, a methodology that applies a generic risk assessment template to all PZU business units, regardless of their specific operational characteristics. Option C, a process that primarily focuses on risks with the most significant historical financial losses, assuming these will continue to be the most critical. Option D, a systematic process that identifies all material risks, including operational, financial, strategic, and reputational risks, and assesses their potential impact and likelihood using a combination of historical data and forward-looking analysis. The correct answer is D, a systematic process that identifies all material risks, including operational, financial, strategic, and reputational risks, and assesses their potential impact and likelihood using a combination of historical data and forward-looking analysis. Explanation: scenario analysis. This scenario presents a professional challenge for Powszechny Zakład Ubezpieczen, PZU, in managing its operational risks. The challenge lies in balancing the need for efficient risk mitigation with the imperative to adhere strictly to Polish insurance regulations, specifically concerning the identification and assessment of significant risks. A failure to accurately identify and assess these risks can lead to inadequate capital allocation, potential solvency issues, and ultimately, harm to policyholders. The professional judgment required involves understanding the nuances of risk assessment methodologies and their regulatory underpinnings. Correct approach analysis. The correct approach involves a comprehensive and systematic identification of all material risks faced by PZU, followed by a robust assessment of their potential impact and likelihood. This aligns with the principles of sound risk management mandated by Polish insurance law and supervisory guidelines. Specifically, regulations require insurers to have in place an effective risk management system that includes the identification, measurement, monitoring, and control of all material risks. This approach ensures that PZU can proactively address potential threats, maintain financial stability, and fulfill its obligations to policyholders, thereby upholding regulatory compliance and ethical standards. Incorrect approach is analysis. Focusing solely on risks with immediate financial implications overlooks other categories of risk, such as operational, strategic, or reputational risks, which can have significant long-term consequences and are also subject to regulatory scrutiny. This narrow focus fails to meet the comprehensive identification requirement. Prioritizing risks based on historical data alone, without considering emerging trends or potential future events, can lead to an incomplete risk profile. Regulations often require forward-looking risk assessments, not just retrospective analysis. Adopting a standardized, one-size-fits-all risk assessment methodology across all PZU business units, without considering the unique characteristics and risk exposures of each, can result in the misclassification or underestimation of specific risks. Effective risk management requires tailored approaches that reflect the diversity of operations. Professional reasoning. Professionals at PZU should employ a structured risk management framework that begins with a broad identification of all potential risk categories. This should be followed by a detailed assessment of each identified risk's probability and potential impact, considering both quantitative and qualitative factors. The assessment should be informed by internal data, industry best practices, and relevant Polish regulatory requirements. A continuous monitoring and review process is crucial to adapt to changing risk landscapes. When faced with uncertainty, a conservative approach that errates on the side of caution in risk assessment is generally preferred from a regulatory and ethical standpoint. Question 9. Operational review demonstrates that Powszechny Zakład Ubezpieczen, PZU, is considering launching a new innovative insurance product. The product is projected to generate significant revenue, but its novel features introduce a range of potential risks that have not been previously encountered by the company. Which of the following approaches best aligns with regulatory expectations and professional best practices for managing these risks? Option A. Implement a simplified risk assessment focusing only on the most obvious operational risks, assuming that market forces will naturally mitigate other potential issues. Option B. Prioritize the product's revenue potential and proceed with the launch, addressing any emerging risks on a case-by-case basis after the product is in the market. Option C. Delay the risk assessment until after the product has been launched and initial sales figures are available to better gauge market reception and associated risks. Option D. Conduct a comprehensive risk assessment that identifies, analyzes, and develops mitigation strategies for all potential risks associated with the new product, integrating this process into the product development lifecycle. The correct answer is D. Conduct a comprehensive risk assessment that identifies, analyzes, and develops mitigation strategies for all potential risks associated with the new product, integrating this process into the product development lifecycle. Explanation. Scenario analysis. This scenario presents a professional challenge for Powszechny Zakład Ubezpieczen, PZU, in managing the risk associated with a new product launch. The challenge lies in balancing the potential for innovation and market growth with the imperative to protect policyholders and maintain regulatory compliance. A failure in risk assessment can lead to financial losses, reputational damage, and regulatory sanctions. The complexity arises from the need to identify, analyze, and mitigate a wide range of potential risks, including operational, financial, legal, and reputational, before the product is introduced to the market. Careful judgment is required to ensure that the risk assessment is comprehensive, proportionate, and aligned with PZU's risk appetite and regulatory obligations. Correct approach analysis. The correct approach involves a structured and comprehensive risk assessment process that integrates with product development. This begins with identifying all potential risks associated with the new insurance product, such as underwriting risks, e.g., inaccurate pricing, adverse selection, operational risks, e.g., system failures, process errors, market risks, e.g., competitive pressures, economic downturns, and compliance risks, e.g., non-adherence to Polish insurance regulations. Following identification, these risks must be analyzed to determine their likelihood and potential impact. Mitigation strategies are then developed and implemented, such as enhanced underwriting guidelines, robust IT controls, clear policy terms and conditions, and staff training. Finally, ongoing monitoring and review mechanisms are established to ensure the effectiveness of the mitigation strategies and to identify any emerging risks. This systematic approach ensures that PZU acts prudently, fulfilling its duty of care to policyholders and adhering to the principles of sound risk management as mandated by Polish insurance law and supervisory guidelines. Incorrect approach is analysis. Focusing solely on the potential profitability of the new product without a thorough risk assessment is a significant regulatory and ethical failure. This approach neglects the fundamental principle of prudent risk management, which is a cornerstone of insurance regulation in Poland. It exposes PZU and its policyholders to unacceptable levels of risk, potentially leading to financial instability and the inability to meet future claims obligations. Adopting a reactive approach, where risk mitigation is only considered after issues arise, is also professionally unacceptable. This demonstrates a lack of foresight and a failure to comply with proactive risk management requirements. Such an approach can result in immediate financial losses, reputational damage, and potential penalties from the Polish Financial Supervision Authority, KNF. Implementing a risk assessment process that is superficial or incomplete, for example, by only considering a limited scope of risks or failing to adequately quantify their potential impact, is another critical failure. This can lead to unforeseen problems and a false sense of security, undermining the effectiveness of risk management and potentially violating regulatory expectations for comprehensive risk assessment. Professional reasoning. Professionals at PZU should adopt a risk-based approach to product development. This involves embedding risk assessment into every stage of the product lifecycle, from ideation to launch and ongoing management. The decision-making process should prioritize the identification, assessment, and mitigation of risks to ensure the product's viability, policyholder protection, and regulatory compliance. This requires a proactive mindset, a thorough understanding of the relevant Polish legal and regulatory framework, including laws governing insurance activities and consumer protection, and a commitment to ethical conduct. When faced with potential risks, the professional decision-making process should involve consulting relevant internal policies, seeking expert advice, e.g., from actuaries, legal counsel, compliance officers, and escalating concerns to senior management when necessary, always with the ultimate goal of safeguarding the interests of policyholders and the financial soundness of PZU. Question 10. The monitoring system demonstrates an unusual pattern in the claims processing times for a specific product line at Powszechny Zakład Ubezpieczen. What is the most appropriate immediate action for the risk management department? Option A. Immediately escalate the issue to senior management for a decision on potential product withdrawal. Option B. Temporarily halt all claims processing for that product line until the anomaly is fully understood and resolved. Option C. Assume the deviation is a temporary system glitch and schedule a routine review of claims processing times for the next quarter. Option D. Initiate a detailed root cause analysis of the claims processing time deviation, gathering data on operational factors, system performance, and any recent policy changes. The correct answer is D. Initiate a detailed root cause analysis of the claims processing time deviation, gathering data on operational factors, system performance, and any recent policy changes. Explanation. This scenario presents a professional challenge because Powszechny Zakład Ubezpieczen, PZU, is obligated to maintain robust risk assessment processes to ensure financial stability and protect policyholders. The monitoring system flagging a deviation requires immediate and accurate interpretation to prevent potential financial losses or regulatory breaches. The challenge lies in distinguishing between a minor operational fluctuation and a significant emerging risk that necessitates intervention. Careful judgment is required to allocate resources effectively and respond proportionally to the identified issue. The correct approach involves a thorough investigation and analysis of the flagged deviation. This means not just acknowledging the alert, but actively seeking to understand its root cause, potential impact, and likelihood of recurrence. This aligns with the principles of prudent risk management expected of financial institutions. Specifically, it adheres to the regulatory framework governing insurance companies in Poland, which mandates proactive identification, assessment, and mitigation of risks. This approach ensures that PZU can make informed decisions, implement appropriate controls, and maintain compliance with supervisory requirements, thereby safeguarding its solvency and operational integrity. An incorrect approach would be to dismiss the alert without proper investigation. This failure to act on a potential risk indicator could lead to unaddressed vulnerabilities, potentially resulting in financial losses, reputational damage, or non-compliance with regulatory directives. Another incorrect approach is to overreact and implement drastic, costly measures without a clear understanding of the deviation's severity or cause. This demonstrates poor judgment and inefficient resource allocation, potentially disrupting normal operations unnecessarily and incurring avoidable expenses. A third incorrect approach is to rely solely on automated responses without human oversight and expert judgment. While automation is valuable, complex risk scenarios often require nuanced interpretation and contextual understanding that only experienced personnel can provide, leading to potentially flawed or incomplete risk mitigation strategies. Professionals should employ a structured decision-making framework when faced with such alerts. This framework typically involves 1. Acknowledging and documenting the alert. 2. Initiating a detailed investigation to gather all relevant data. 3. Analyzing the data to determine the root cause and potential impact. 4. Assessing the severity and likelihood of the risk. 5. Developing and implementing appropriate mitigation strategies. 6. Monitoring the effectiveness of the implemented strategies and adjusting as necessary. This systematic process ensures that all potential risks are addressed in a timely, proportionate, and compliant manner. Question 11. The monitoring system demonstrates a consistent upward trend in claims frequency for PZU's Secure Future pension product over the past 2 quarters. What is the most appropriate immediate response from the risk management department? Option A. Classify the trend as a statistical anomaly and continue with standard quarterly risk reporting without further action. Option B. Immediately increase premiums for the Secure Future product to offset the projected rise in claims payouts. Option C. Initiate a detailed actuarial investigation into the drivers of the increased claims frequency and assess its potential impact on reserves and pricing. Option D. Revert to historical average claims data for the Secure Future product to establish a baseline for future analysis. The correct answer is C. Initiate a detailed actuarial investigation into the drivers of the increased claims frequency and assess its potential impact on reserves and pricing. Explanation. This scenario presents a professional challenge because Powszechny Zakład Ubezpieczen, PZU, is obligated to maintain robust risk assessment processes to ensure financial stability and protect policyholders. the monitoring system's output, indicating a potential increase in claims related to a specific product line, requires immediate and accurate interpretation to prevent adverse financial consequences. The challenge lies in distinguishing between a temporary fluctuation and a systemic risk that necessitates a change in underwriting, pricing, or reserves. Careful judgment is required to avoid both underreacting, which could lead to financial losses, and overreacting, which could unnecessarily impact profitability or customer relations. The correct approach involves a thorough, data-driven investigation into the root causes of the observed trend. This entails not just acknowledging the data, but actively seeking to understand its drivers. This aligns with the principles of prudent risk management as mandated by Polish insurance regulations, which require insurers to identify, measure, monitor, and control risks. Specifically, Polish Act on Insurance Activity and Reinsurance, Ustawa o Dieselownoskach Ubezpieczeniowego I Reaskurasaźnej, and related supervisory guidelines from the Polish Financial Supervision Authority, Komisja Nadzoru Finansowego, emphasize the need for insurers to have adequate internal control systems and risk management frameworks. A proactive investigation into the claims trend, involving actuarial analysis, claims department review, and potentially product management input, is the most appropriate response to fulfill these regulatory obligations and safeguard the company's financial health. An incorrect approach would be to dismiss the trend as insignificant without further investigation. This fails to meet the regulatory requirement for proactive risk identification and management. It could lead to underestimation of future liabilities and potential solvency issues. Another incorrect approach would be to immediately implement drastic, unverified changes, such as a significant price increase or product withdrawal, based solely on the initial data. This lacks the necessary due diligence and could be detrimental to PZU's market position and customer trust, potentially violating principles of fair treatment of customers and sound business practices. A third incorrect approach might be to rely solely on historical averages without considering the current trend, thereby ignoring emerging risks and failing to adapt the risk assessment to current conditions. The professional decision-making process for similar situations should involve a structured approach. First, acknowledge and document the observed anomaly. Second, initiate a detailed investigation to understand the underlying causes, utilizing relevant internal expertise and data. Third, assess the potential impact of the identified causes on PZU's financial position and operational stability. Fourth, develop and implement appropriate mitigation strategies based on the findings of the investigation. And finally, continuously monitor the effectiveness of these strategies and the overall risk landscape. Question 12. The efficiency study reveals that Powszechny Zakład Ubezpieczen, PZU, could significantly reduce operational costs by automating certain customer service functions and streamlining claims processing. However, these proposed changes involve the handling of sensitive policyholder data and could alter the speed and nature of customer interactions. Which approach best ensures that PZU navigates these potential efficiency gains responsibly and in compliance with Polish regulatory requirements? Option A. Focus solely on the technological feasibility and cost-benefit analysis of the proposed changes, assuming that regulatory compliance will be an incidental outcome of efficient operations. Option B. Prioritize the rapid implementation of automation and streamlined processes to achieve cost savings quickly, with a plan to address any regulatory issues that may arise post-implementation. Option C. Conduct a comprehensive risk assessment that explicitly incorporates Polish insurance law, RODO, and KNF guidelines to identify and mitigate potential compliance and ethical risks before implementing any changes. Option D. Delegate the entire risk assessment and implementation oversight to the IT department, trusting their technical expertise to manage any data handling or process-related concerns. Correct answer is C. Conduct a comprehensive risk assessment that explicitly incorporates Polish insurance law, RODO, and KNF guidelines to identify and mitigate potential compliance and ethical risks before implementing any changes. Explanation. This scenario presents a professional challenge because Powszechny Zakład Ubezpieczen, PZU, operates within a highly regulated insurance sector in Poland. The efficiency study's findings, if not handled with due diligence, could lead to significant regulatory breaches and reputational damage. The core of the challenge lies in balancing operational efficiency with the stringent requirements of Polish insurance law and ethical conduct, particularly concerning customer data and fair treatment. Careful judgment is required to ensure that any proposed changes do not compromise the company's compliance obligations or its duty of care to policyholders. The correct approach involves a comprehensive risk assessment that explicitly considers the regulatory framework governing PZU. This means identifying potential risks associated with the efficiency improvements, such as impacts on data privacy, RODO General Data Protection Regulation, fair claims handling, and the provision of accurate information to customers. The assessment must then evaluate the likelihood and impact of these risks and propose mitigation strategies that align with Polish insurance regulations, including those set by the Polish Financial Supervision Authority, KNF. This proactive, compliance-first approach ensures that PZU can pursue efficiency gains without jeopardizing its legal standing or customer trust. An incorrect approach that focuses solely on cost reduction without a thorough regulatory review fails to acknowledge the legal obligations PZU has. This could lead to implementing changes that, while cost-effective on the surface, violate data protection laws, misrepresent policy terms, or create unfair disadvantages for policyholders, thereby incurring fines and legal penalties. Another incorrect approach that prioritizes speed of implementation over a detailed risk analysis risks overlooking critical compliance issues. This haste can result in unintended consequences that are far more costly to rectify than a well-planned, compliant implementation. Finally, an approach that delegates the entire risk assessment to a department lacking specific regulatory expertise, such as IT or operations without legal oversight, is also flawed. This can lead to an incomplete or inaccurate assessment of regulatory risks, as the nuances of insurance law and consumer protection may not be fully understood or addressed. Professionals should employ a structured decision-making framework that begins with understanding the regulatory landscape. This involves identifying all applicable laws and guidelines, such as those from the KNF and RODO. Next, potential efficiency initiatives should be mapped against these regulations to identify areas of potential conflict or risk. A thorough risk assessment involving relevant legal and compliance teams is crucial. This assessment should inform the decision-making process, prioritizing solutions that are both efficient and compliant. Continuous monitoring and review of implemented changes are also essential to ensure ongoing adherence to regulatory requirements. Question 13. The monitoring system demonstrates a consistent, albeit small, upward trend in the frequency of claims related to a specific type of property insurance product offered by Powszechny Zakład Ubezpieczen. This trend has been observed over the last 2 quarters and is currently within the company's historical acceptable variance for this product line, but it is approaching the upper limit of the risk appetite framework. What is the most appropriate next step for Powszechny Zakład Ubezpieczen's risk management department? Option A. Reallocate a portion of the claims handling budget to expedite processing of these claims, assuming the trend is a temporary operational surge. Option B. Continue to monitor the trend without immediate intervention, as it is currently within the acceptable variance and does not pose an immediate threat to solvency. Option C. Immediately increase premiums for this specific product line to offset the projected increase in claims payouts. Option D. Initiate a detailed root cause analysis of the claims trend, cross-referencing with underwriting data, policyholder demographics, and external environmental factors, to determine if the trend represents an emerging risk requiring strategic adjustment of pricing, underwriting guidelines, or product features. The correct answer is D. Initiate a detailed root cause analysis of the claims trend, cross-referencing with underwriting data, policyholder demographics, and external environmental factors, to determine if the trend represents an emerging risk requiring strategic adjustment of pricing, underwriting guidelines, or product features. Explanation. This scenario presents a professional challenge because Powszechny Zakład Ubezpieczen, PZU, is obligated to maintain robust risk assessment processes to ensure financial stability and protect policyholders. The monitoring system has identified a deviation, requiring immediate and accurate risk classification and response. The challenge lies in correctly interpreting the identified deviation within the context of PZU's internal risk appetite framework and relevant Polish insurance regulations. specifically those pertaining to solvency and risk management. A failure to accurately assess and respond to this deviation could lead to regulatory breaches, financial losses, and reputational damage. The correct approach involves a comprehensive review of the identified deviation against PZU's established risk appetite statement and relevant prudential regulations. This approach is correct because it directly addresses the identified issue by seeking to understand its root cause and potential impact on PZU's solvency and operational integrity. It aligns with the principles of sound risk management and regulatory compliance, which mandate proactive identification, assessment, and mitigation of risks. Specifically, Polish insurance law, e.g., Ustawa o ubezpieczeniach obowiązkowych, ubezpieczeniach majątkowych I osobowych, and related implementing regulations from KNF Komisja Nadzoru Finansowego, requires insurers to have in place effective risk management systems, including regular monitoring and assessment of risks. This approach ensures that any identified risk is evaluated in light of its potential to breach regulatory capital requirements or impact the company's ability to meet its obligations. An incorrect approach would be to dismiss the deviation without further investigation, assuming it is a minor anomaly. This is professionally unacceptable because it demonstrates a disregard for the monitoring system's findings, and a failure to adhere to the principle of proactive risk management could lead to the escalation of an unaddressed risk, potentially resulting in a breach of solvency requirements or other regulatory violations, which would attract penalties from the KNF. Another incorrect approach would be to immediately implement a drastic, unanalyzed corrective action without understanding the nature and magnitude of the deviation. This is professionally unsound as it may lead to unnecessary operational disruption, increased costs, and could even introduce new, unforeseen risks. It bypasses the crucial step of risk assessment, which is fundamental to determining the appropriate response. A third incorrect approach would be to only consider the immediate financial impact of the deviation, ignoring potential systemic or reputational risks. This is flawed because risk assessment must be holistic, encompassing all dimensions of risk, not just the most apparent. PZU's regulatory obligations extend beyond mere financial solvency to include fair treatment of customers and market integrity, which can be indirectly affected by unmanaged risks. The professional decision-making process for similar situations should involve a structured approach. 1. Acknowledge and document the identified deviation from the monitoring system. 2. Initiate a thorough investigation to understand the root cause and nature of the deviation. 3. Quantify the potential impact of the deviation on PZU's financial position, solvency, and operational processes, considering both quantitative and qualitative factors. 4. Compare the assessed risk against PZU's risk appetite statement and relevant regulatory thresholds. 5. Determine and implement appropriate mitigation or remediation actions based on the risk assessment. 6. Monitor the effectiveness of the implemented actions and reassess the risk. 7. Report findings and actions to relevant internal stakeholders and, if necessary, to the KNF, in accordance with regulatory requirements. Question 14. Upon reviewing the current operational landscape and potential future challenges for Powszechny Zakład Ubezpieczen, which approach to risk assessment best aligns with the principles of prudent financial management and regulatory compliance within the Polish insurance sector? Option A. Relying exclusively on historical loss data to predict future risks, assuming that past patterns will accurately reflect future events. Option B. Focusing risk assessment efforts solely on the most frequently occurring low-impact risks, while disregarding less frequent but potentially high-impact events. Option C. Implementing a comprehensive risk assessment framework that systematically identifies, analyzes, and evaluates potential risks across all business units, considering both historical data and emerging trends, and documenting mitigation strategies. Option D. Conducting a purely theoretical risk assessment based on academic models, without direct consideration of Powszechny Zakład Ubezpieczen's specific operational context or available resources. The correct answer is C. Implementing a comprehensive risk assessment framework that systematically identifies, analyzes, and evaluates potential risks across all business units, considering both historical data and emerging trends, and documenting mitigation strategies. Explanation. This scenario presents a professional challenge because it requires an individual at Powszechny Zakład Ubezpieczen to balance the need for proactive risk identification with the practical constraints of resource allocation and the potential for overregulation. The core difficulty lies in determining the appropriate level of detail and scope for risk assessment without becoming overly burdensome or missing critical emerging threats. Careful judgment is required to ensure the assessment is both comprehensive and efficient, aligning with the company's operational realities and regulatory obligations. The correct approach involves a systematic and documented process that considers both internal and external factors relevant to Powszechny Zakład Ubezpieczen's operations. This includes identifying potential risks, assessing their likelihood and impact, and developing mitigation strategies. This approach is justified by the principles of sound risk management, which are implicitly or explicitly required by regulatory frameworks governing financial institutions and insurance companies in Poland. Such frameworks emphasize the need for robust internal controls and a proactive stance on risk, ensuring the stability and solvency of the entity. An incorrect approach that focuses solely on historical data without considering future trends or emerging threats would fail to meet the forward-looking nature of effective risk management. Regulatory expectations often extend beyond past performance to anticipate future challenges. Another incorrect approach that prioritizes only the most obvious or frequently occurring risks, neglecting less frequent but potentially catastrophic events, would be a failure to conduct a comprehensive assessment. This could lead to significant unforeseen losses and regulatory scrutiny. Furthermore, an approach that is overly theoretical and disconnected from the practical operational realities of Powszechny Zakład Ubezpieczeń would be ineffective, as it would not lead to actionable risk mitigation plans. Professionals should employ a decision-making framework that begins with understanding the specific context of Powszechny Zakład Ubezpieczeń, including its business model, market position, and regulatory environment. This should be followed by a structured risk identification process that considers a wide range of potential risks. The assessment of likelihood and impact should be informed by both quantitative data and qualitative expert judgment. Finally, the development and implementation of mitigation strategies must be practical, cost-effective, and aligned with the company's risk appetite and regulatory requirements. Regular review and updates to the risk assessment process are crucial to maintain its relevance and effectiveness. Question 15. Strategic planning requires Powszechny Zakład Ubezpieczeń to effectively identify and manage potential risks, considering the company's operational environment and regulatory obligations. Which of the following approaches to risk assessment would best support PZU's long-term stability and strategic objectives? Option A. Conducting a comprehensive risk assessment that involves an initial broad identification of potential risks, followed by a tiered evaluation of their likelihood and impact to prioritize mitigation efforts. Option B. Prioritizing in-depth analysis of all identified potential risks, regardless of their perceived likelihood or impact, to ensure no stone is left unturned. Option C. Relying primarily on historical incident data to identify risks, focusing resources only on those categories that have historically resulted in significant losses. Option D. Deferring detailed risk assessment until specific incidents occur, at which point a reactive investigation will be initiated. Correct answer is B. Prioritizing in-depth analysis of all identified potential risks, regardless of their perceived likelihood or impact, to ensure no stone is left unturned. Explanation. Scenario analysis. This scenario presents a challenge for Powszechny Zakład Ubezpieczeń, PZU, in balancing the need for proactive risk identification with the practical constraints of resource allocation and the potential for overregulation. The company must ensure that its risk assessment processes are robust enough to identify emerging threats to its financial stability and operational integrity, as mandated by Polish insurance regulations, without becoming overly burdensome or stifling innovation. The difficulty lies in discerning which potential risks warrant immediate, in-depth investigation versus those that can be monitored or addressed through standard operational procedures. This requires a nuanced understanding of risk appetite, regulatory expectations, and the company's strategic objectives. Correct approach analysis. The correct approach involves a tiered risk assessment methodology. This begins with a broad scan of the external and internal environment to identify potential risk categories. Subsequently, A qualitative assessment is performed to gauge the likelihood and potential impact of these identified risks. This allows PZU to prioritize risks based on their potential severity and the resources required for mitigation. Risks deemed high priority are then subjected to more detailed quantitative analysis and the development of specific mitigation strategies. This approach aligns with the principles of prudent risk management expected under Polish insurance law, which emphasizes a proportionate and effective approach to risk oversight. It ensures that PZU focuses its resources on the most significant threats while maintaining a comprehensive awareness of its risk landscape. Incorrect approaches analysis, focusing solely on risks with a high historical frequency, regardless of their current potential impact, is an incorrect approach. While historical data is valuable, it does not account for evolving market dynamics, new technologies, or changes in the regulatory environment that could elevate the impact of previously low-frequency risks. This can lead to a failure to identify and address emerging threats. Adopting a purely reactive stance, where risk assessment is only initiated after an incident has occurred, is also fundamentally flawed. Polish insurance regulations require a proactive approach to risk management, emphasizing the identification and mitigation of risks before they materialize. A reactive approach leaves PZU vulnerable to significant financial and reputational damage. Implementing a uniform, highly detailed risk assessment for every conceivable minor operational deviation is an inefficient and potentially counterproductive approach. While thoroughness is important, an overly granular and resource-intensive process for low-impact risks can divert attention and resources from more critical areas, leading to a dilution of effective risk management. Professional reasoning. Professionals at PZU should employ a systematic and risk-based approach to their strategic planning and risk assessment. This involves 1. Establishing clear risk appetite statements aligned with regulatory requirements and business objectives. 2. Developing a framework for identifying risks across all operational areas, including strategic, financial, operational, and compliance risks. 3. Implementing a multi-layered assessment process that prioritizes risks based on a combination of likelihood and impact. 4. Allocating resources for risk mitigation and monitoring in proportion to the identified risk levels. 5. Regularly reviewing and updating the risk assessment framework to adapt to changing internal and external environments. This structured methodology ensures that PZU can effectively manage its risk exposure in a manner that is both compliant and strategically advantageous. Question 16. Quality control measures reveal that Powszechny Zakład Ubezpieczen, PZU, has been collecting extensive personal information from potential policyholders, including details about their lifestyle and social circles, beyond what is strictly necessary for underwriting standard insurance products. This data is stored in a central database with varying levels of access controls. What is the most appropriate approach for PZU to manage this situation in compliance with relevant Polish regulations? Option A. Focus solely on improving the technical security of the database to prevent external breaches without altering current data collection practices. Option B. Implement a policy allowing employees to access and utilize any collected data for client relationship management, provided they do not share it externally. Option C. Continue collecting all available data as it may prove useful for future risk assessment or marketing opportunities, while enhancing general cybersecurity measures for the central database. Option D. Immediately cease all collection of non-essential lifestyle and social circle data, review existing data for relevance and necessity, and implement stricter, purpose-driven data collection protocols. The correct answer is D. Immediately cease all collection of non-essential lifestyle and social circle data, review existing data for relevance and necessity, and implement stricter, purpose-driven data collection protocols. Explanation. Scenario analysis. This scenario presents a professional challenge for Powszechny Zakład Ubezpieczen, PZU, due to the inherent conflict between the need to maintain accurate and up-to-date risk profiles for policyholders and the potential for sensitive personal data to be mishandled or misused. The challenge lies in balancing the company's legitimate business interests with the privacy rights of individuals, requiring careful judgment to ensure compliance with data protection regulations and ethical standards. Correct approach analysis. The correct approach involves a systematic and documented process for assessing and updating risk factors, ensuring that any data collected is relevant, necessary, and processed in accordance with the principles of data minimization and purpose limitation. This approach aligns with the requirements of Polish data protection law, specifically the RODO GDPR, which mandates that personal data be processed lawfully, fairly, and transparently, and collected for specified, explicit, and legitimate purposes. It also emphasizes the need for data accuracy and security, requiring PZU to implement appropriate technical and organizational measures to protect personal data. Incorrect approaches analysis, an approach that involves broadly collecting all available information about policyholders without a clear, defined purpose for each data point risks, violating the principle of data minimization and purpose limitation. This could lead to the unnecessary collection and storage of sensitive data, increasing the risk of breaches and non-compliance with RODO. An approach that relies on informal or ad hoc methods for updating risk information, without established procedures or documentation, fails to ensure data accuracy and consistency. This can lead to flawed risk assessments, potentially resulting in unfair pricing or coverage decisions, and also creates a lack of accountability and auditability, which is a regulatory concern. An approach that prioritizes speed and efficiency over data privacy and security by not adequately vetting data sources or implementing robust security protocols exposes PZU to significant legal and reputational risks. This directly contravenes the RODO requirements for data security and integrity. Professional reasoning. Professionals at PZU should adopt a risk-based approach to data handling, guided by the principles of data protection law. This involves first identifying the specific purposes for which data is needed, then determining the minimum data required to achieve those purposes, and finally implementing secure and compliant methods for collecting, processing, and storing that data. Regular reviews and updates to these processes are essential to maintain compliance and ethical standards. Question 17. Examination of the data shows that a potential applicant for life insurance at Powszechny Zakład Ubezpieczen has recently taken up a new hobby that involves a moderate level of physical exertion and has also expressed interest in traveling to regions with a slightly higher incidence of certain tropical diseases. Based on this information, what is the most appropriate approach for Powszechny Zakład Ubezpieczen to take in assessing the risk associated with this applicant? Option A. Automatically assign a higher risk premium due to the introduction of new activities that could potentially increase health risks. Option B. Focus solely on the applicant's age and general health status, disregarding the new hobby and travel plans as irrelevant to the core risk assessment. Option C. Decline coverage outright, citing the potential for increased health risks associated with the new hobby and travel. Option D. Conduct a detailed review of the applicant's medical history and inquire about the specifics of the new hobby and travel plans to determine their actual impact on mortality risk, in line with established underwriting guidelines. Correct answer is D. Conduct a detailed review of the applicant's medical history and inquire about the specifics of the new hobby and travel plans to determine their actual impact on mortality risk, in line with established underwriting guidelines. Explanation. This scenario presents a professional challenge due to the inherent conflict between identifying potential risks and the need to maintain client confidentiality and trust. Powszechny Zakład Ubezpieczen, as an insurance provider, has a duty to assess risk accurately to ensure fair pricing and solvency, but this must be balanced against the ethical obligation to protect sensitive client information. The challenge lies in discerning when a risk assessment crosses the line from prudent due diligence to an inappropriate or discriminatory use of information. The correct approach involves a systematic and objective evaluation of the identified data points against established underwriting guidelines and regulatory requirements. This approach prioritizes the use of information directly relevant to the insurability of the risk and the potential for claims, as defined by Powszechny Zakład Ubezpieczen's internal policies and Polish insurance law. Specifically, it requires focusing on factors that demonstrably impact the probability or severity of a loss, such as pre-existing medical conditions for life insurance or driving history for motor insurance, without resorting to generalizations or assumptions based on protected characteristics. This aligns with the principles of fair treatment of customers and non-discrimination, as mandated by Polish insurance regulations, which aim to prevent unfair practices and ensure that premiums reflect actual risk. An incorrect approach that involves making assumptions about an individual's lifestyle or future behavior based on limited or circumstantial data is professionally unacceptable. This could lead to discriminatory pricing or denial of coverage, violating ethical principles and potentially contravening anti-discrimination laws. For instance, assuming a higher risk solely because an applicant belongs to a certain demographic group, without concrete evidence linking that group to increased risk for the specific insurance product, is a failure of objective risk assessment. Another incorrect approach would be to disregard potentially relevant risk factors that are objectively quantifiable and permissible under underwriting guidelines, simply to avoid any perception of bias. While vigilance against bias is crucial, completely ignoring valid risk indicators can lead to inaccurate risk assessment, potentially undermining the financial stability of Powszechny Zakład Ubezpieczen and leading to underpricing of risk, which ultimately impacts all policyholders. This would be a failure to adhere to sound actuarial principles and regulatory expectations for prudent risk management. A third incorrect approach would be to rely on anecdotal evidence or stereotypes when evaluating risk. This is not only unprofessional, but also ethically unsound and legally problematic. Insurance underwriting must be based on statistical data, actuarial science, and clearly defined underwriting criteria, not on subjective biases or hearsay. The professional decision-making process for similar situations should involve a clear understanding of Powszechny Zakład Ubezpieczen's underwriting manual and relevant Polish insurance legislation. When faced with ambiguous data, professionals should seek clarification from supervisors or underwriting specialists. The focus should always be on objective, verifiable information that directly relates to the risk being insured, ensuring that all decisions are justifiable, non-discriminatory, and in compliance with regulatory standards. Question 18. Assessment of potential conflicts of interest when a senior manager at Powszechny Zakład Ubezpieczen, PZU, is responsible for approving a significant contract with a supplier where the manager's spouse holds a substantial ownership stake in that supplier. What is the most appropriate course of action for the senior manager to take to ensure compliance with regulatory requirements and ethical standards? Option A. Delegate the final approval decision to a subordinate without disclosing the personal relationship, assuming the subordinate will make an objective decision. Option B. Immediately disclose the relationship to the relevant compliance department and seek independent advice on how to proceed, recusing themselves from the final approval process if a conflict is confirmed. Option C. Proceed with the contract approval if the terms are deemed commercially favorable to PZU, assuming the personal relationship will not influence the decision. Option D. Inform the supplier that the contract cannot be considered due to the potential conflict and terminate discussions. Correct answer is B. Immediately disclose the relationship to the relevant compliance department and seek independent advice on how to proceed, recusing themselves from the final approval process if a conflict is confirmed. Explanation. This scenario presents a professional challenge because Powszechny Zakład Ubezpieczen, PZU, operates within a highly regulated financial services environment in Poland. The assessment of risk, particularly in relation to potential conflicts of interest, requires a nuanced understanding of Polish insurance law and ethical guidelines governing financial professionals. The challenge lies in balancing the need to gather comprehensive information for risk assessment with the imperative to avoid situations that could compromise impartiality or lead to unfair treatment of clients or the company. The correct approach involves a proactive and transparent identification and management of potential conflicts of interest. This aligns with the principles of good corporate governance and regulatory compliance mandated by Polish law, such as the Act on Insurance Activity and the Act on Combating Money Laundering and Terrorist Financing, which emphasize integrity and the prevention of illicit activities. By documenting the identified conflict and seeking independent advice, the professional demonstrates adherence to ethical standards and regulatory requirements designed to protect both PZU and its stakeholders. An incorrect approach that focuses solely on the immediate financial benefit without considering the potential for conflict of interest fails to meet regulatory obligations. This could lead to decisions that are not in the best interest of PZU or its clients, potentially violating fiduciary duties and exposing the company to reputational damage and regulatory sanctions. Another incorrect approach that involves ignoring the potential conflict due to its perceived minor nature is also professionally unacceptable. Even seemingly small conflicts can escalate or create a perception of impropriety, undermining trust. Polish regulations emphasize a robust approach to risk management, which includes the diligent identification and mitigation of all potential conflicts, regardless of their initial perceived magnitude. A further incorrect approach that involves making a decision based on personal relationships rather than objective risk assessment directly contravenes ethical principles and regulatory expectations of impartiality. Such actions can lead to biased decision-making, favoritism, and a failure to uphold the professional standards expected of employees at PZU. The professional decision-making process in such situations should involve a systematic evaluation of potential conflicts of interest. This includes identifying the nature of the relationship or interest, assessing its potential impact on objectivity and impartiality, and determining appropriate mitigation strategies. When in doubt, seeking guidance from compliance departments or legal counsel is a crucial step in ensuring adherence to regulatory frameworks and ethical standards. Question 19. Which approach would be most appropriate for Powszechny Zakład Ubezpieczeń to assess the potential impact of emerging risks, such as new cyber threats or evolving climate-related events, on its future solvency and operational stability, considering the limited historical data available for these specific risks? Option A. Relying exclusively on historical loss data and established actuarial models to predict future risk exposure, as these provide the most statistically reliable basis for assessment. Option B. Focusing solely on risks that can be precisely quantified with current data, deferring the assessment of less quantifiable emerging risks to a later stage when more data becomes available. Option C. Prioritizing risk assessment methodologies that demonstrate the quickest path to identifying short-term cost savings, assuming that long-term risks will naturally be mitigated by market forces. Option D. Employing scenario analysis and expert judgment to identify potential future risks and their plausible impacts, supplemented by qualitative assessments where quantitative data is scarce. Correct answer is D. Employing scenario analysis and expert judgment to identify potential future risks and their plausible impacts, supplemented by qualitative assessments where quantitative data is scarce. Explanation. This scenario presents a professional challenge for Powszechny Zakład Ubezpieczeń due to the inherent uncertainty and potential for significant financial impact associated with emerging risks. The company must balance the need for proactive risk management with the practicalities of resource allocation and the availability of historical data. Careful judgment is required to select a risk assessment approach that is both compliant with Polish insurance regulations and effective in identifying and mitigating potential threats to the company's solvency and operational stability. The correct approach involves a forward-looking methodology that explicitly considers the likelihood and impact of novel or evolving risks, even in the absence of extensive historical data. This aligns with the principles of prudent risk management expected of insurance undertakings under Polish law, which emphasizes the need to identify and manage all material risks, including those that are not yet fully understood or quantified. Such an approach allows Powszechny Zakład Ubezpieczeń to anticipate potential future challenges and develop appropriate mitigation strategies, thereby safeguarding policyholder interests and maintaining financial resilience. An approach that relies solely on historical data would be professionally unacceptable because it fails to address the dynamic nature of the insurance market and the emergence of new risk factors. Polish insurance regulations, such as those derived from Solvency Roman II directives as implemented in national law, require undertakings to consider all material risks, including those that are not fully captured by past experience. This would lead to a significant regulatory and ethical failure by leaving Powszechny Zakład Ubezpieczeń exposed to unforeseen events without adequate preparedness. Another incorrect approach, focusing only on quantifiable risks, would also be deficient. While quantitative analysis is crucial, many emerging risks, such as those related to climate change, cyber threats, or geopolitical instability, may initially be difficult to quantify precisely. A responsible risk assessment must incorporate qualitative assessments and expert judgment to understand the potential impact of these risks, even if a precise numerical probability cannot be assigned. Failure to do so would represent a breach of the duty of care to policyholders and stakeholders. Finally, an approach that prioritizes short-term financial gains over long-term risk management would be ethically and regulatorily unsound. Powszechny Zakład Ubezpieczeń has a fundamental responsibility to ensure its long-term solvency and ability to meet its obligations. Ignoring emerging risks in favor of immediate profitability would undermine this core responsibility and could lead to severe financial distress, potentially impacting a large number of policyholders. A professional decision-making process for similar situations should involve a comprehensive understanding of the regulatory landscape, a commitment to a robust risk management framework, and the ability to adapt methodologies to evolving circumstances. Professionals should consider a blend of quantitative and qualitative techniques, engage with subject matter experts, and maintain a proactive stance towards identifying and assessing potential threats, ensuring that risk assessment is an ongoing and integrated part of the company's strategic planning. Question 20. Implementation of a risk assessment framework at Powszechny Zakład Ubezpieczeń requires careful consideration of various methodologies. Which of the following approaches best aligns with the principles of effective and proportionate risk management within the Polish regulatory context for insurance companies? Option A. A narrowly focused assessment that concentrates only on risks explicitly mentioned in the company's operational manuals, assuming all other risks are negligible. Option B. An assessment driven solely by external audit recommendations, without proactive internal identification of emerging risks. Option C. A comprehensive top-down assessment that identifies all potential risks across every operational area, regardless of their perceived likelihood or impact, to ensure no risk is overlooked. Option D. A dynamic risk assessment process that prioritizes risks based on their potential financial and reputational impact, likelihood of occurrence, and the company's existing control measures, with regular reviews and updates. The correct answer is C. A comprehensive, top-down assessment that identifies all potential risks across every operational area, regardless of their perceived likelihood or impact, to ensure no risk is overlooked. Explanation. The scenario presents a common challenge in risk assessment within an insurance company like Powszechny Zakład Ubezpieczeń, balancing the need for comprehensive risk identification with the practical constraints of resource allocation and the potential for overregulation. The core difficulty lies in determining the appropriate level of detail and scope for risk assessment without stifling innovation or creating an overly burdensome compliance environment. A robust risk assessment framework is crucial for Powszechny Zakład Ubezpieczeń to identify, evaluate, and mitigate potential threats to its financial stability, operational efficiency, and reputation. This involves understanding the specific regulatory landscape governing insurance operations in Poland, which mandates certain risk management practices. The correct approach involves a systematic and proportionate risk assessment that considers the likelihood and impact of identified risks, aligning with the principles of sound risk management as expected under Polish insurance regulations. This approach prioritizes risks based on their potential severity and the company's capacity to absorb losses, ensuring that resources are directed towards the most critical areas. It also involves regular review and adaptation of the assessment process to reflect changes in the business environment and regulatory requirements. An incorrect approach would be to conduct a superficial risk assessment that only identifies obvious or low-impact risks, neglecting potentially significant threats due to a lack of thoroughness or a misunderstanding of the regulatory expectations for Powszechny Zakład Ubezpieczeń. This failure to adequately identify and assess risks can lead to unforeseen losses and noncompliance. Another incorrect approach would be to implement an overly complex and resource-intensive risk assessment process that is disproportionate to the actual risks faced or the company's size and complexity. This can lead to inefficiency, administrative burden, and a focus on minor issues at the expense of more critical ones, potentially deviating from the spirit of efficient regulatory compliance. Professionals should approach risk assessment by first understanding the specific regulatory obligations applicable to Powszechny Zakład Ubezpieczeń, such as those outlined by the Polish Financial Supervision Authority, KNF, concerning risk management in insurance undertakings. This involves a clear definition of the scope of the assessment, the methodologies to be employed, and the criteria for evaluating risk. A structured process that involves input from various departments, regular reporting, and a mechanism for escalating identified risks is essential. The decision-making process should be guided by a principle of proportionality, ensuring that the effort invested in risk assessment is commensurate with the potential impact of the risks and the company's overall risk appetite, while always adhering to the letter and spirit of the law.